Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on an exciting Sunday night where the price is actually much higher than $71.87. But we are about to cover the Sunday night open. And fortunately, I'm here with my dear friend and colleague who might say it's been quite a blessing to share this journey with here. And that's Vince Lancy. And we're going to dig into the Sunday night open. We'll see whatever happens in just 2 minutes. And keep in mind, we have something that came out after our call on Friday, which everyone I've mentioned it to, which is a list of people now have been quite stunned, including Vince himself. And Vince, with that said, welcome on in here, sir. How are you?
I'm good. Thank you for having me. It's going to be 20 lower or 20 higher. That's for sure. I'll be happy. Whatever happens.
Well, Vince, we're less than 2 minutes away. Would you care to even venture a guess or any thoughts about what you think we might see?
Um, I'll say 75 bid at 85. So I think it'll come in unchanged to the China close. And then from there, who knows what'll happen.
All
So
right. Well,
I
I'm
mean
gonna
I want it to come in at 95, but I'm just being careful.
Well, I think based on what we'll cover when our other guest arrives in about 10 minutes, as well as some of the things coming out in China, and I keep hearing these indications over the weekend of a China and Dubai price. I don't know how valid of a feed that would be in such thin liquidity, but
Right.
I'm going to go with we open higher in silver, and we are just under a minute away. Vince, while we wait, could you explain for folks where they saw the futures up at 79, almost $80, and then you have this unusual print there? Because I know people were wondering about that.
Yeah. Okay. I'm 99% sure. I don't show it on my screen. I think my screen updated it.
Oh,
But
excuse me, Vince, but we have just opened and we're slightly higher. We're the COMEX futures above $80. All right, there we
that's
go.
I think I called that. I think I said 75.85, meaning in the middle, 80. Unchanged. That's unchanged. You know what I mean?
Well, that's
But
up about $1 already from where it actually. I kept looking at 79.63, which is what they had posted for about an hour until
right,
later on Friday night. Now,
right.
81, there we go.
Yep.
Oh my
But mind you,
goodness.
that's the US. Hold on, Chris. That's the London spot price. That means the Shanghai price is going to open between 85 and 95.
Well, no, Vince, we have spot price 81.41. Actually, let's go over here where we can see futures about to crack 82, 5 cents away. There you go, 82 in the futures. Vince, I might say you gave this wide market. I took the over on you. So futures over 82. It looks like we still have normalization in the futures spot market relationship. But Vince, why don't you, any thoughts you have here, and I'll sit back and listen.
Well, yeah. All right. So what are we looking at? We're looking at the U.S. spot market, which opened up at 80, and now, as you said, is trading 81.30, 81.40, clicking in dimes. And that is a representation, a reasonable, we think, representation of where the London spot market is. Now, the London spot market was is now trading 81 and change, which puts it at 250 higher. Now, the spread between Shanghai and spot and US is basically this. Spot and the London spot market, which has been frozen, is finally rising to appreciate with the price of Shanghai. So Shanghai is probably going to open at 8 o'clock between 87 and 92, which is, pretty significant. The relationship between, I think what we're seeing in this real-time behavior is what we're seeing is that all the supply in the world, to simplify it, has been in London, right? Goes through London. And all the demand in the world has been out of China. And over the last 6 months, I think the world just figured out that China is insatiable in their appetite. And having seen that, the price of China is now more appropriately dictating the global price. So the global price is converging to China's higher price. just as it did in gold. But with silver, it's a lot more dramatic.
Vince, there we have the spot price currently up $2.37.
Yep.
So a little bit of a rally. We'll take a look back here over the futures at up. Now again, that $4.46 is skewed by that print that we had here,
Oh
which
yeah. You wanted me to speak to that. Should I speak to that now? Just to
please.
get it out of the way? Everybody who looks at the board and they say, oh, silver traded 79.50 or thereabouts last, and then there's a print down to 77 and change. What is it, 77.19 you said?
Yep.
Yeah. Okay. That's not a trade. That's not a print. The settlement for books is the COMEX settlement at 2 p.m. And so what happens is all the trading after 2 p.m. is Globex trading, and it goes on the same chart, but then they yank the settlement down to where the market is. We rallied $2 and almost 50 cents after 2 p.m. on Friday. That'll give you an idea of why that settlement is so out of whack. Settlement was $2.50 lower than where the market rallied to after COMEX closed. So that's a Globex trade versus a COMEX trade.
Okay,
So
and it
we are up $2 and change. That's how
it
I look
might
at it.
I might add it looks here and there. I don't know how quickly these are being updated, but I see for a second or two the curve go into backwardation. For
Yeah.
anyone who might not have seen this before, this one where it says March 26th, that's the March futures contract, and this is the spot price. So right there, when that's if it's a little bit higher this row, that means the
Right.
market has gone into backwardation. And Vince, what was the final Shanghai price that you had when trading stopped on Friday?
Yeah, I have two prices. One is the last trade during Shanghai hours. I have at let me just refresh my screen to make sure it hasn't changed.
It looks like backwardation widening a little bit, although still moving
Yeah.
quickly as we have a new high there at 82.61 in
So
the futures. Wow.
yeah, so the high on Friday in Shanghai was the equivalent of $83 and it closed at $81. And uh, I don't know how to read this session, but it says that their Monday morning session is open and it's trading $85. Now, I don't see it anywhere else. I'm working on getting a live feed from Shanghai, but I don't see it right now. But it's quite possible that it'll be between 85 and $90 on the reopen. Probably $90. Look at it this way: the Shanghai premium versus the U.S. premium at its biggest was $8 a couple days ago. So that will shrink as the market rallies because all the demand is being pulled, all the supply is being pulled out of the West into China, which we've been seeing for the last 5 years anyway.
Okay, and I'll refresh that. That looks stuck, but we see 82.73 in the spot price. Vince, our guest, who is a CEO of a mining company, we'll let him say in his own words. Actually, got his message right after we wrapped up on Friday. He'll be
That's right.
coming on in just a couple minutes. So perhaps to set the stage, there's a few things that have happened where, when we see the price up so much on Friday, okay, well, why? Is it just, the COMEX going wild? But I think there's some key data points that I laid out on Friday. It'd be great to get your opinion. But the first of which is Friday morning when you're doing your video, China's already over 80. You mentioned at one point this is physically driven. This isn't just COMEX speculators or someone getting short squeezed. And then the significance of if you can ascertain which of the two it is, what that actually means.
Right. Yeah. That's good that you bring it up that way because I think we should talk about this rally in context of 1980 and 2011, and then pivot to what your special guest is going to say without giving it away, because it dovetails exactly into what we were talking about on Friday right after the close. So first, to compare and contrast now to say 1980 and 2011, historical analogies in this situation a lot of people are using those historical analogies as a parallel to what's happened in the past will happen in the future. And I'm not going to say that's wrong, but this isn't a rally that will be ended just by squeezing a couple of long speculators out. Historical analogies obscure more than they clarify right now, meaning the silver rallies of 1980 and 2011, I don't care that the Hunt brothers were buying physical, they were leveraged, were driven primarily by speculative positioning. Futures volumes expanded, leverage increased, and very little metal was demanded. Now, I know the Hunt brothers bought a lot of metal, but their last purchases were purchases of physical with profits from other physical, and that's how they got screwed by the exchange. So, market infrastructure actually functioned back then because delivery remained rare, and when you really wanted delivery, they prohibited it. But that's not happening this time. Uh, the stress is appearing in physical channels first. This isn't starting on a COMEX commitment of traders report. It's starting at the LBMA. It's being noticed in China and it's being felt in Latin America, as your guest is going to bring up. So, margin hikes and position limits, okay, can reduce leverage. And sure enough, when the COMEX raises margins, that's going to force people that are undercapitalized to liquidate. But people that are undercapitalized are no longer the shorts. I mean, no longer the longs. The longs are physical buyers. It's not you and me buying a future with our Visa, at 20%. It's China buying silver. It's India buying silver. It's Samsung buying silver. It's probably Elon Musk's businesses buying silver. And at the same time that this physical demand, kind of like in the old days when Kodak was buying for film, hits the market, you have to have supply. But as your report showed, the report that you put out recently showed that we're in 5 years of deficits, and that bridge has been built between the deficits and the present using above ground stores. So basically, they begged, borrowed, and steal. So this is just to before we move on to the China aspect. London is the problem. Now, this isn't a bias statement, even though I make fun of them. The global silver market ultimately cleared until recently through London. So more precisely, it clears through a small interdealer network dominated by four major banks. And if one of those four major banks doesn't trust the other three, or the other three don't trust that one, they stop loaning metal to each other to close deals. And if those leases shut down internally in that little hub, you have no metal moving. So now you have metal trading at $82.24 on spot, and you've got London not trading it. Why? Because they don't have any metal to sell and they don't have any money to buy. So that goes through the whole scenario of why you may raise margins and it may knock out some weak longs. It'll also knock out some weak shorts. But in the end, if you made the COMEX futures market completely cash and took away all the leverage, the market would be higher because there would be no longs left and only shorts seeking to cover contracts that they sold for metal that they don't have. So that's the first part. Um, the second part, uh, relates to China, and I'm gonna put it. We've been talking with tinfoil hats, you and I, about this stuff, but I'm gonna give you another tinfoil hat that's going to dovetail into what your guest has to talk about. Uh, you brought up London getting its metal from China, the leases, and how that actually drained China. And so China was leasing a lot of metal to London to give it a bridge to make deliveries that it was already obligated to India. So in effect, China leased metal to London, and London drop shipped it, to use Eric's phrase. To London basically drop shipped it to India, and now London's got to find that metal to get back to China, and China wants their metal, which brings us to Black Friday. Remember what happened Black Friday?
Hmm.
On Black Friday, when the exchange was closed, two things happened in like 6,000 miles apart. but were completely related. One was China had a short cover on their exchange, try to buy thousands of contracts. The other one was right before that, uh, JP Morgan took about 13 million ounces of metal off of its registered platform and put it on eligible, meaning they didn't make it available for delivery. The word, and this isn't me talking, I had my own tinfoil hat on this, but the word was during that time, someone in China tried to buy metal in the US to cover a short contract they had in China. Who it was, I don't know. They were denied that metal. And since then, China has been scrambling to get that and more metal. So they're going to Latin America. They're actually, I've been told that JP Morgan is actually potentially being contracted to buy metal for China. So they have both sides of the trade, which is what they do. But I think the key part of this is something that you and I discussed. And who was it that mentioned this? Someone at First Majestic a long time ago about the concentrate.
It was a silver mining executive, let's say.
Okay, yeah. Um, for the last 5 years, I mean, this is Bai Jiaojun mentioned this to me as well. For the last 5 years, China has been going into Latin America and buying concentrate before it hit the market. So it didn't look like there's anything going on the surface of the price, but underneath it, they were depleting the metal coming on the market. Now, the US, with its blockade of Venezuela, with its new Monroe Doctrine, is restricting access to metal in the Western Hemisphere. And so, even though we're not embargoing it, even though we're not prohibiting it, you got to pay the price. And the price now is almost $83. And it's not going to stop until someone finds the metal. My guess is China is asking JP Morgan to buy metal for them. China is trying to buy it on the Shanghai exchange. China can't get it from London because London ain't got shit, right? China is holding the metal out for something that they want to use down the road. And your guest is going to pretty much blow it out of the water when he says it. So that's all I want to say, except that it's a physical rally. It's not a futures rally. They can raise margins to 200%. They'll only be making the bullion banks that are short go to the Fed window and borrow money. Because if it's not a short squeeze, then they're just going to keep rolling their losses until someone says, give us the metal. And that's what's going on right now. China is losing patience and needs their metal.
Well, Vince, and speaking of our guest, he has just appeared. We'll bring him on in a moment. And
Sure.
like you said, it's happening right now because if investing.com's feeds are accurate, we're seeing the spread blow out. That's about a buck 30 now,
Let me see that. Uh,
which to put in context for people, normally the futures is anywhere depending on how close the contract is. The futures trades 10 to 30 or 40 cents over the spot price. Back on October 9th, when, as we may say, the silver market broke to a degree. Vince, I remember that 2 days earlier it was at 50 cents. Then Thursday morning you're doing your broadcast. I remember calling you. I'm like, geez, is that a buck 20 negative? And then it got up to as much as $3 inverted.
right,
And like you saw when we started this call, there's the spot price over $83.
right,
And when we
right,
started the call, the futures, this one with the March 26th there was trading slightly over. So not only has it gone into backwardation, but gone into significant backwardation. And
right.
it's like you were just pointing out where that's what happened before because London needed the metal, and you're seeing their bid now about a buck 40 over the COMEX, and we're seeing it happen live, which is fascinating. And just in support of the rest of what you said, we knew that when the metal came from the US and China over to fill so India had a problem and then London had a problem. So we get some metal from the US and China. And then we've known that China had an issue already, which is why when you said that on Friday that this is a physical issue and we see the premiums in China surge, we see that fund shut down, and then you add in that we already knew their supply was low. That is how you end up with what we are seeing here. And with that said, I'm quite pleased and excited to bring in a special guest. My dear friend David Stein of Kuya Silver is about to hop in and join us here. in just a moment. And there he is, David. David, great to see you. Quick introduction, David, longtime friend and supporter of the show. And yeah, I think you were watching the broad live show I did when I got home on Friday night. And then I got your message right after I finished that and was basically walking through what Vince and I have been discussing about the evidence of why this might be more physical than speculation. And Vince will come back to what the difference would imply. And David, then you had something that I thought was pretty shocking. I've mentioned it to a few people over the weekend. We're quite accomplished in the silver world, and we're also equally stunned. And that said, how about that build up? David Stein of Kuya Silver. Welcome on in, my friend.
Thanks, Chris. Thanks. Hi, Vince. Yeah,
Hey,
good to see
David.
everyone. And I just like rushed
Oof.
home for to jump on this call. I see silver's now at $83, so just the craziness continues.
Yep.
Yeah, there you go. 83.25 in the spot
Yeah.
price, up another $4. So, David, great to have you here, and perhaps you could share what you experienced on Friday.
Yeah, so Friday, we as Chris, I think you mentioned, but I'm the CEO of Kuya Silver. We have an operating silver mine in Peru, and on Friday we received actually two inbound requests, both from Chinese firms looking to get physical silver this week. And at the time, they were offering us actually $83, which I think at the time was probably an $8 premium because this would have been Friday morning. I think the price was around 74, 75 at the time. So so that was uh, that was that was what we received. Now we produce concentrate, not silver metal at the moment, and we have a contract to sell our concentrate. So unfortunately, we weren't in the position to sell that silver at $83 at the time on Friday. But well, I mean, we're going to get that $83 anyways because because it's we're seeing that now on Monday here. So that's basically the anecdote. And obviously, if anyone, if you have any questions about like how the whole, sales process works from the point of a miner, I'm happy to answer the questions because we live and breathe this all the time.
Well, I sure appreciate that. And just to make sure everybody has this right, you're saying that had you had the silver in the format they were looking for available, at least it seemed as if more than one party came ready to say, here's the money, we'll take it at
Yeah,
$83 on Friday.
they were looking for like metallic silver, so like, like high percentage silver that some mines do produce that. It depends on the process. So that's what they were looking for, basically to get it to China, I assume, and and they were, as I said, they were willing to pay an $8 premium at the time.
Okay,
I,
Vince,
I, I
go
have a couple
ahead.
questions. Can I ask any?
Sure. Yeah, of course.
Hey, David, I got like three questions I want to ask to help kind of narrow it for me, and hopefully help people out that are going to have the same kind of questions I will. First of all, did you talk to any other colleagues without saying any names that were also approached?
I don't know. This actually came through us directly through Peru, and so I would assume that they were calling everybody, but I don't
Right.
know that for sure.
Right. They have a list of miners, and you were on
Yeah.
the list, and you're not a special friend, at least
No, we're
maybe you
not a
are.
special
No.
friend. We don't normally deal with these guys.
Right.
Um, Chinese metals traders are there in Peru. They're not like the biggest, but
Right.
but Peru and China have a pretty friendly relationship, so they are there. There are Chinese companies that run big copper mines and stuff in Peru.
Right.
So it's not an unusual thing to see
Right.
that kind of
So
call.
that makes a lot of sense. Thank you. You say that you have concentrate without obviously divulging your client book or anything. Do you or any of your colleagues offload concentrate to China? And or put it this way, have you seen that happening in the area? Let's put it that way.
So actually, I can tell you who we sell our concentrate to because it's public.
Okay,
We have a deal with them, that they funded us a few years ago. So it's Trafigura. So
great.
that's who
Yeah,
we currently sell our. It's a limited contract, but that's who we sell it to. There are a couple of like significant Chinese traders that have offices in Lima that
right,
do metals trading.
right,
I expect when they get that port done, the new Chinese port, and it's going to be north of Lima, there'll be even more. But yeah, so when we were actually looking for, we have to sell our concentrate to somebody anyway. So a couple of years ago, we decided, okay, well, we need some funding for the mine. We need to sell
right,
our concentrate anyway. Let's talk to everybody and see what the best deal we could get. So we talked to some of these Chinese guys. This would have been back in 23,
right.
and we had some discussions, but at the end of the day, Trafigura gave us the best deal. So
Well, I mean, they're the
um,
biggest. They're like the biggest. They're best financed, and they're probably going to end up selling it to China anyway.
correct.
That's
Yeah,
their job. You know what I
that's
mean?
their job. Yeah, yeah.
I totally see it. So I have a question from uh from someone on the refining side, a
Sure.
U.S. based uh refined person. He said to me over the last 3 months when silver cracked $50. Again, we're just speaking anecdotally here. That there was a lot of metal that started to get pulled into the U.S. from Mexico and changing the supply pattern. Like the supply pattern used to be going from Mexico to China on the concentrate side. I mean, extraneous stuff, and then getting refined for LBMA metal. But this person said to me, the U.S. refiners, what are there, two of them, maybe three, are so busy right now because of not just because of some retail selling their coins, but mostly because of metal coming from South America destined for the U.S. now. Have you seen any evidence of that from your side of the continent?
Um, I, because we deal in the concentrate market, that
Right,
really tends to go to Asia. So Japan, Korea, China.
right,
Um, Now, so where you would see the guys who would be selling directly to the US would be those mines, the gold silver mines, which there are
right,
some in Peru. There's a lot of them in Mexico, right?
right,
And so it's just geologically, what do you have in your ore and what's the process that you're to extract it?
right.
And yeah, I can't speak for those other gold silver
No, I
mines, but
understand.
yeah,
The reason I'm asking and I'll just back off and give it to Chris is because this refiner said there's a lot of metal coming in. We're turning away metal that's less than four nines because we have to get this done. There's a buyer. And the question that we were asking each other was, well, why is silver climbing while this is happening if there's plenty of supply coming into the US? And the conclusion is whoever is buying it doesn't want to hedge it. And so I viewed it as direct offtake from Latin American mines. And he didn't disagree with me, but we don't have the proof yet. Interesting.
yeah. Yeah, Chris probably knows some people who can answer that better than me,
Thank you,
Uh,
David.
like Keith Newmeyer.
Right.
well, I mean, we've been, as you and I have talked about before, Vince, we've heard that they've been making deals direct. And I don't think it's just one or two companies. We've heard what we were told, and I've seen it pop up elsewhere. Just a quick update. We have a high for the spot price of 83.99, I'll call it.
Yep.
And Vince, to what you said in terms of the refineries, our friend Brian Kuzmar from Commercial Rare Coins in not too far away from me in Florida, he's mentioned a couple times in the past few months that there are two LBMA approved silver refineries in the U.S. and one of them is currently down. It's wild that this is happening while we're still in the midst of a large selling wave on the retail level. Although if we're running into supply issues already now, it sure makes you wonder, well, what happens if that ever changes and the selling is exhausted? I would imagine there would be a good bit of selling with the prices at these levels. I'm sure there's some people who have no intention of selling anything, but others that I'm sure there's some people out there who are selling. And David, back to what you were saying though, again, I mean, it's like if we'd heard that First Majestic got a call like this, where it's like the biggest pure or primary silver producer, and I think you touched on this a little bit, but again, you're a great company that you've created, a bit of a newer company that has just gone into production. So I'm thinking if they're calling the smaller companies, it makes you wonder like how many different calls are being made right now to acquire silver, and anything you can say to that.
Yeah, I mean, I, I have to say, and I don't, I don't know these other companies, and I don't want to like kind of speak ill of them, but just the fact that they're calling us, period, is I think showing some desperation in a sense, because it's very public, like what we do. We're a public company. So, you know, in like 10 minutes on our website, you can probably figure out that A, we produce concentrate, not silver metal, and B, we sell to Trafigura. And so, we're the fact that they're calling guys like us, and look, there's a whole bunch of other silver concentrate producers in our area, many of whom are other public companies as well. Maybe speaks to the panic that's happening. They're just like calling absolutely everybody under the sun, because I don't think we're special in that sense. So yeah, so that would be the way I would look at it. I would interpret it.
Okay, and Vince, I know that you need to head out in a couple of minutes, so anything that you'd like to add, and perhaps you could comment on how we now have, looks like into backwardation by over $1, and any
Right.
final thoughts that you'd like to share.
I think the backwardation part, the backwardation of spot going over US futures, forget about Shanghai, finally happening, which has been held back for the last 2 months. We've seen mini squeezes, we've seen tightness of supply, but it's not until the acknowledged spot market goes over the US futures that you have a full-blown metal physical short squeeze. And that's the result of the reason it hasn't happened for like 2 months is because, to use the word, somebody was tamping down demand in London, and that demand went elsewhere. They couldn't fill the order. And so the market's trading 75, but spot was trading under futures in the US. That's not a short squeeze unless London itself was being, let's say, uh, managed lower in terms of price. It's kind of like London is a store that sells uh, silver, and they've just hung a sign out that says they're open for business, but when you call them, no one picks up the phone. I believe tonight is significant because you now have pointed out spot that is now over American futures, and that's a sign that London is starting to capitulate to the problem that's going on globally. Whether they have the silver or they're just admitting that they don't have the silver, I don't know. But I think we're going to see some people carried out on stretchers over the next couple of weeks if this keeps up. And that's it. I mean, the backwardation from spot over silver, says you should be calling an ambulance if you're
One of the Duke brothers might have already, the other one just passed out. And
right.
actually, one last question before you run, but it's like, and you touched on this in the fantastic interview you did, which I might add, the revised Big Silver Short second edition, our book will be out with Vince Lancey's bonus chapter, where you talk more about how I guess the dream scenario for silver investors is that you have deficits, you have demand, and then eventually one day a manufacturing company is saying, I need silver, and they can't get it.
Right.
Given that China is the heart of the silver industrial usage, is it reasonable to say that at least that day could have been Friday?
Yes, I think we've seen the beginning of that. And I want to add something to that. People talk about China correctly as an industrial magnet for silver. I'm going to throw something out there that's It's not brand new, but myself and a couple other people are some of the first people to do it. When you and I first met, one of the things that we were talking about was what collateral will the BRICS use for investment in their new M trade or M bridge or unit? And the answer was gold. Why? Because gold is useless. It's a pet rock and it's not used for anything. Well, as the gold price goes up, if you're a country that doesn't have a lot of gold and you want to be a part of the BRICS, but you have a lot of silver, what are you going to do? You're going to say, can I use my silver as collateral? And we're actually looking at the remonetization of silver in the BRICS part of the world, which is why I believe China has really been buying a lot of silver, not because everybody's buying solar panels. There's no one, who's their biggest customer? We are. David, are you buying a solar panel from China?
If I buy a solar panel, it's probably coming from China.
Right, but over here in the US where the
Yeah,
big money is, we're not buying, you know what I mean? Like
I
I,
bought
I
them in
think,
the past. I have
oh
solar
yeah,
panels in my house right now, but I'm not in the market for any new ones.
no, I'm with you. I'm with you. But I guess what I'm saying is the volume. I've done a little bit of math on this, and the volume of silver that China has been importing for the last 5 years is far in excess of solar panel demand. And they're not giving out silver panda coins to people for free. They're accumulating it for collateral. The point is, industry and investment are now competing with each other for silver, and that's
Well,
very
and
dangerous.
isn't the most recent kind of, BRICS news that Mexico has been talking with them, talking with the bloc,
Yeah,
and they have a lot of
yeah,
silver.
exactly. But in fact, wasn't it Mexico in 2005 that wanted to actually remonetize silver? Salinas, are you familiar with that story?
No, I need to look at that.
Well, it ended as quickly as it started, but in 2005, a wealthy businessman in Mexico said it was right after their own crisis. He said, "You know what? People are not comfortable with the peso. Right? Latin America was falling apart back then. People are not comfortable with the peso. Let's introduce the Liberty coin, the Libertad coin, as our co-currency." And it went through they have, what do they have? A House and a Senate type of setup. And it went through, one was approved, and went for the other one, and it wasn't. The guy's name was Salinas, Salinas. And in 2005, they got 50% of the way there to monetizing silver. And that is why Mexico is a risk, and probably why China has been buying it all this time. I think that's a good point. Mexico is in a good bargaining position with the US right now, right? You want our
Yeah,
silver?
they
Give us a good
they
deal.
yeah, and they're sitting right there between BRICS and between North America, right?
I know, I know, I know. Thank you for having me on, Chris and David. Really nice to meet you.
Nice to meet you.
Good
Thanks.
luck. I can
Good.
stay
Thanks
in
for
touch
making
with you.
some time, Vince. Great to have you here. Like, are you doing a video in the morning tomorrow? I'm
I
I'm
think so.
assuming you will. Where else would you be?
Exactly. Thank you very much. Have a
We'll
good
see
night.
what Vince in the morning tomorrow. Thank you, Vince. Appreciate you being here and have a good night, my friend.
Bye bye.
All right. And David, do you have a couple more minutes? I could see if
Yeah,
people have questions. There was
absolutely.
I would say there are a list of prominent people in the industry who were also blown away by what you revealed. So if anyone has a question about that, what David found or anything else there, then go ahead and put them in. One other thing I'd like to highlight, David, I don't know if you saw this yet, but here on Friday we have China Silver Fund plunges after a string of moves to quell frenzy. This was a UBC fund. Tightened the ruling on new subscriptions. So they basically stopped taking new money. And David, as I know
Right.
you're aware, and probably most of our viewers, that these are ETFs. They're making their money on commission. So especially when a market gets hot, you would think they'd be running out to sell as much as possible. So this happened on Friday, and we saw what happened the rest of Friday, and we see what's happening so far tonight. And in case anyone maybe is newer to the silver market, missed this, as I mentioned earlier, we had the spreads blowout back in October. What happened? The reported the day that the spreads blew out and mentioned that it was the previous day. We had the same thing. India silver funds restricted investment. So I guess if you see funds restrict investment in an area that is going into a shortage of silver, at least the last two times it happened, the price has done well the next day after that. But I mean, again, I'll give that same question to you of does this feel like we're at the point where, at least on some level, the companies that need silver now cannot get it, and as a result, that is what's driving what we see here?
Yeah, it certainly feels like it. I mean, I listened. I think it was on Friday when you were talking about the ETF, uh, and I have to say, what was interesting, most interesting, besides the news that they closed down the ETF to new investment, was how it was being characterized as protecting people from volatility or something, which is BS. I mean,
Bless you.
and just the fact that whatever news service. I mean, I saw that it was Bloomberg AI that wrote that article. Um, so I mean, I guess they're just parroting whatever people tell them. But I mean, that makes absolutely no sense. There's definitely something else going on there if you're basically commanding a private UBS private fund to stop taking new investment. um I mean, I don't think that would happen in the US. I think the US is more profit first, and that's probably why multiples in the US stock market are more than in Asia, because Asia governments like China control the free market. um but there's something bigger at play here, which is probably they're trying to protect or keep control of the supply of silver there, and they don't want it stuck in a warehouse if they need it for something else.
Well, it sure is fascinating to see it play out. And by the way, I'd like to welcome on in. It looks like we have quite a crowd out there watching. So, a lot of new friends who are joining us today. Great to have you here. And if you're interested in what's happening in gold and silver, go ahead and hit the subscribe button and get the notification bell, because that's what we keep you posted on. Vince will be back with his morning broadcast tomorrow at 9 a.m. Eastern. So you can make sure that you see that one. God only knows what the price will be. David, would you like to offer a price forecast how about by 9:30 tomorrow when the stock markets are opening? Would you like to venture a guess where the price might be by then?
um I'll say $84, so slightly higher than where it is right now. It's
All
settled
right.
back to 82, I think. Is that right?
We have the spot price just under 82. The
Yeah.
backwardation has narrowed a little bit. It's about 50 cents with the futures at 81.45. We do have a high for the spot price of 83.99. So I mean, I guess you got to do like something bigger than that, but we've already been there yet. It will be a fun I have a
Yeah, I mean,
feeling.
we've got 15 hours, right? We've got a that a lot could happen in the next 15 hours.
Please,
That's
everyone watching at home, please try and go to bed at some point, or just drink coffee all night and stay up. David, we have a couple questions coming in, and if anyone else has one, we'll try and get a couple in here. We won't go too long tonight. I don't know, unless we break 90,
sure.
then if,
I
if we
can't see
break
the chat,
90
by the
tonight,
way.
David, I'm calling you in like an hour or two. So,
Yeah.
but David, obviously, what we're seeing with the silver price is stunning. Of course, in our audience, we have a lot of people that are invested, in some cases, heavily invested in the mining stocks. Where now to say that the miners have not moved this year is not quite accurate. If you owned mining stocks this year, you're having a nice Christmas. You're able to get the GI Joe with the Kung Fu grip. Yet, with that said, I think there's a fair case to be made that relative to the move that we've seen, and especially on Fridays, a lot of the miners weren't moving too much. My advice would be that whether we think it should or not, they don't always move linearly, especially on a day-to-day basis. And David, I just mentioned you or have the perspective of not only someone who's running a silver company, so understands being on the other side of what investors are saying, but also I know you are heavily invested in a variety of mining companies as well, and anything you could say for the people who want to know about the mining stocks.
Yeah. Well, I don't know if I'd say heavily. The only company I'm heavily invested in is Kuya, but I mean, but um, no, I can even do even better than that, Chris. Before I started Kuya, I was an equity analyst, and I followed a whole bunch of silver and gold mining companies. In the last bull market, which was 2001 to 11, 10-year bull market, and we there were times, I distinctly remember when there was more of a focus on gold, sometimes silver, but the gold or silver price would kind of shoot up and make a new high, and the stocks wouldn't follow right away. And I feel like the equity investors are a little bit more like wait and see, a little bit more risk averse maybe, and so they would be like, this is going to be a spike. It's going to come right back down. I'm not going to buy it, right? And so I think that's what we were seeing on Friday is just people, when the silver price goes up, it went up 10%, right? Single day. It's a lot. Um, and people just don't believe it, don't believe it's sustainable, and so we're going to have to see and kind of prove it that it is sustainable, and have silver sitting here, 75, $80 for maybe a few days or weeks, and then I think the stocks will shoot up. People will start to reprice them for what silver is now versus thinking still that silver is going to go back down to 40 or $50, because I feel like the equity investors on the whole still are thinking that this is a bit of a flash in the pan move here.
Yeah, and David, maybe you could comment on how if the price of the commodities going up this much, yes, there is a mathematical number you could calculate in bottom line, but the reason it often doesn't work that way, something I know a lot of people have heard Rick Rule talk about, where first in these rallies, first it goes into gold, then into silver, then to the gold stocks. Silver stocks will usually last. So there's also that element where okay, the silver price is going up, but it takes a while for people to respond and have it sink in and also believe the price is going to stay elevated. And perhaps you could comment there.
Yeah, I mean, you think of the kind of investment universe almost like a bunch of pools in a fountain, and the first pool has to fill up first, and then it starts pouring into the second one, and then the next one, and that's kind of the way I think about it. Um, and basically, that water is like liquidity, right? And so, why does someone buy, Barrick or Newmont when the gold price goes up? Why do they buy? Why do they go to those stocks first? Well, because they're really big and liquid. It's not because they're like growing really fast and they're like really exciting companies to own or they pay a high dividend. No, none of that stuff actually. It's just because they want something that's liquid, that if they change their mind tomorrow, they can sell without affecting the market, right? And they can get their money back. And that's kind of the way I feel when they start to dabble in the market in the beginnings of a bull market. They start to dabble in those mega caps, those large caps, ETFs as well, which have a lot of liquidity. And then gradually people get more comfortable. They're like, well, I want to make some real money in this rally. So let me buy something a bit more risky that's got more upside. And so then they go down to the mid caps and the juniors. So that's kind of the way I see it, and we've seen this play out in many rallies over the past 20-25 years.
And David, I would imagine that the first quarter earnings or the fourth quarter earnings, which will come out in the first quarter next year, should be a fun time. And for people who are wondering, here is the third quarter, going a little farther back there, but you see the price getting up to the 40s and then around $40 at the beginning of September. And here's the fourth quarter. So, we've only had $80 silver for a couple of hours. We've only had $70 silver for a day or two. So, not the whole quarter coming in, but I mean, you can see, let's get our box out of the way
Yeah.
there. I mean, the companies have been getting historical prices on what they've been selling. So thoughts on the earnings we might look at in a couple months?
Yeah, I mean, it looks to me, and you could do the arithmetic average of the whole quarter, but it looks to me like it's going to be probably somewhere between 50 and 60,
Yeah.
probably closer to 50 would be the average price for the quarter. And I mean, if you're like a really big company and you sell like a little bit of silver every day, then you probably get more or less the average of the quarter, which would be like, for example, a First Majestic, right? Um, and so that's going to be a bit higher than what they got in the third quarter. And so their earnings should be positively impacted by that move. Although you won't fully see the impact of this recent move really more until Q1, right? But the market will go there. They'll go there. They'll see once they see the earnings and how they're rising quarter over quarter. They'll probably go there and say, okay, great. Now let's run things at $80 an ounce or 75 or whatever we decide at that point in time, and then the market is forward looking after all, right? So that's one thing. I mean, for us, our sales are a lot more lumpy because we produce a bunch of ore, then we process it, and then we kind of sell it in chunks, right? So I mean, we sold some earlier in the quarter. I think we sold some in early December, if I remember correctly. We're going to end the year with a stockpile that we're going to processing in January and selling in January. So, we may end up, kind of accidentally benefiting more from this move up, just because of the timing of sales. It should benefit us, especially if the price stays high here in the first few days of January.
Yeah, well, nicely done, my friend. And perhaps, since you mentioned that, do you have your earnings date already for people who might want to take a closer look at what you're doing and when you'll have your results out?
So we'll put out an operational update, with like tons and grade, all that kind of stuff, around January 15th. And then the actual earnings will be the third week of February. So whatever Thursday, the third Thursday of February is, I'm gonna say that our earnings will be probably around that date. Um,
Okay.
yeah.
Just
Oh, no, no,
perhaps.
sorry. It's Q1, so we have longer to put them out because it's audited financials. So yeah, so the financials don't come out until April. I apologize for that.
Okay. And have you put out production guidance just to give people context, in a full year, how many ounces of silver you're producing?
We haven't done that yet because we're in a ramp up phase. It's been tough to forecast. Although we're getting further along, it's gonna there. I think we will be able to put out more of a forecast. I think in early 26. We're looking to kind of complete that phase one of the ramp up by the second half of next year, of 26. And so the as I said, the production and the sales and stuff, it's kind of lumpy as you're ramping up. But yeah, I mean, what we've been doing just to keep communication with the market is we've been putting out an operational update about 2 weeks after the close of the quarter, and then that gives people a good idea of how the operation is managing. And we said when we put out our Q3 financials, which was November, that we had hit record production in November, in terms of the mine production at Bethania. And so we feel like we're on track.
Okay, and David, another thing, perhaps we'll make this the last question before we wrap up for tonight. We see here are the deficit numbers from the Silver Institute several years in a row. Looks like it gets smaller this year, yet this line includes what goes into the ETFs, where I might add, as somewhat predictably, as the price has rallied. If you see blue here, that means, and this is November and December, that means metals going in. You can also see that at this chart here, as that blue line goes up, that means more metals going into the ETFs. So, David, you're one of the people on the front lines where, when it comes to a matter of there's a deficit, it's counting on companies like you. And we'll go back here where we see, if you include the ETFs, as a 300 million ounce deficit. last year. The ETFs, in fact, David, we know this is going to be bigger than 295 because they had 200 million ounces. This was put out mid-November, and you can see if you look mid-November, we're about 1290 and we're already up to 1360. So already since the Silver Institute put out their mid-year update in November saying that 200 million ounces have gone in, leaving us with a 295 million ounce deficit. We're already 70 million ounces higher than that, and this less than a month and a half. And could you comment on the mining environment? Obviously, you don't flip the switch and get the silver tomorrow. So to begin with, when people say, well, will the higher price bring more metal back on? And there are projects that can be turned on, but there's a time lag, and uh, we're already hitting a problem now. So what could you say to that to put that all together for people?
Sure. It's important. You can see they're forecasting basically flat mine production. I mean, I think when you really want to look at what could impact mine production, you really have to look at those mega projects, the ones that are sitting out there that could produce 10 plus million ounces a year. There's very few of them. None of them are sort of coming on stream in the next few years that I'm aware of, and a lot of them are mired in like very significant, permitting, social issues, et cetera, permitting and CSR issues, um, that could keep them, that could keep them in the ground for many years, decades, indefinitely. Who knows? So I think that's one thing to think about. I mean, as much as Kuya could do very well and as a stock, and I mean, I expect us to do very well as we ramp up production. We're going to produce annualized, so this would be more of a 2027 number. Maybe 1.5 million ounces of silver. In terms of, it's not going to affect this at all. And then, even if we go to 5 million in the next few years, I mean, that's probably $1 billion+ company. It still barely makes an impact so, on the supply demand, right? You need these 10 plus million ounce mines there's very few of them really to make an impact. And the default, by the way, is that mine production goes down. If you do nothing, production goes down because grades tend to fall in
Yeah.
most mines. You mine the best stuff first if you can, and once the capex is in there, then you start to lower the grade and take lower grade stuff out because the capex is already a sunk cost. This is how many mines operate, and uh, and so we may it's, as I said, it's very very difficult for people just to flip a switch and turn a mine on, and it's impossible. So you're looking at either expansions of existing mines, which can still take years to do an expansion again, unless it's already in the works and fully permitted, etc. But in most cases, they aren't. I think we could be sitting around that, let's call it between 800 and 825, mine production for the next several years before there can really be an impact. And the other thing is there's a lot of byproduct production in silver. It's part of the market. So you watch what copper's doing, you watch what gold's doing, and I think it's just more of the same. There's not a lot of new supply coming on in those metals either.
Well, I guess that's how you end up with prices soaring through 80. And looks like we have the spot price still above 82 bucks, and futures just around 82. So quite stunning. And I might add again, welcome on into all the new people who have joined us tonight. I see we have quite a crowd there, and sure appreciate you being here and that people are taking an interest in silver, certainly seeing historic events. If you want to stay posted on what's happening, you can go over to arcadiaeconomics.com anytime we have a show, we send it out, and we'll have Vince all week. David, I was trying to take my first vacation in years this week, and I think I'm still gonna do a trip. I was supposed to leave for today. We got delayed a day. I think I'll leave tomorrow, but we'll probably be back here. Vince will be back here. So if you'd like to be notified when shows go up, that's the way to do that. And then David, perhaps just say thank you again. I really appreciate what you shared. I think that's a very useful piece of market information that I'm glad I heard. Hopefully, everyone at home enjoyed. And if is there a way for people to reach you to find out more about what you're doing if they want to get in touch?
Yeah, well, you're on the right place. That's our website, www.kuyasilver.com, Kuya Silver. And from there, you can go to the contact tab and you can either, email us or I think you can book a meeting with us as well. And we're also on all the social media. You can reach us there. I'm pretty one of us, myself, or one of our team. We're pretty responsive. We're a very investor friendly company. So feel free to reach out.
Well, I can testify to that, and also for people who might be seeing either you or me for the first time tonight. It's been a pleasure knowing you for several years. Also, seeing the way that you took a project that was raw and have brought it into production, especially that you did that during the bear market. There's a lot of people who looking at silver now they don't remember David again. The last time I saw you in person, I think was the absolute low at the Symposium in 2022 when silver dropped below $18. And so certainly I can say that it's been really incredible to watch and follow your success. And I'll be excited for you to sell some silver above $80 this week. Congratulations on that. And we'll get one final look at the price. 81.90 on the spot price, 81.65 on the futures. And again, how about a big hand for David Stein joining us on a Sunday night when I know he's traveling and quite busy. And but I really appreciate you sharing that. Link to Kuya Silver. You don't even have to type it in the description field below. And on your way out, as we wrap up, leave your forecast for everyone watching at home. What do you think the price of silver is going to be by the time you wake up and have breakfast or your
Well,
coffee? And
yeah, I said 84. I think I think in 2026 we should see. I really like to see the gold price participate in this move. I think that will really help to put a firmer base in the silver and help continue, keep the rally going. So I watch gold pretty carefully as well. I think it's going to go to 5,000. I think silver, is probably between 100 and 150, sort of a between a 30 and a 50 ratio. And that's where I see things going in 2026. Now, it might be a roller coaster up and down to get there. If we have to see what happens with the broader stock market and how that affects precious metals, because the money has to come from somewhere. But it's looking really really good, really bullish. We're really excited. We're really happy we're producing silver now, and yeah, let's see what happens.
yeah, and just as you mentioned, gold there, gold was up before, but how many people thought they would see a day where silver, and we will call it up about $2.50? Again, there was that funky print on Friday, so I would not consider that quite valid, but silver up $2.50, while gold is down a few dollars. So special time for the silver investors. I know we're a bit of a unique breed, and but it really is for those of you who are invested and following this for so long. I hope it's just been a wonderful Christmas week and holiday season for everyone. So we will wrap up there. But David, thank you again, and for everyone at home watching, thank you for being here, and hopefully we'll see you again. And we'll look forward to seeing what happens in the next couple hours leading into tomorrow.